All right, good afternoon. Let's do a market review for today, which is Tuesday, the second trading day of this week. We don't have any special, the high impact news for this week. Let's double check one more time. See, we have any right. Yep. Today we have some retail PMI, PMI at 945, and the home sales. I saw some movement around 945 Eastern time, and I wonder if that's because of the new maybe the new come out. Let's see what is. So basically it dropped 0.28% for today, and the volume is low today, so it seems to me like today it's a pullback, a pullback with a low volume. So on a 5-minute time frame, you see the volume about 59, so it's way below the average 60-day average 76 million share right there. The 359, yeah, 86, something like that, right? Okay, let's review one of the trade we practiced this morning. So basically, so far we see that Monday, the first candle 4-hour time frame down, but the second candle up, and then we see the head and shoulder form on the H1, right? And today on the Tuesday, we see H4 candle 09 is down, and 4-hour second candle is also down. Right here. This is the 1-hour time frame. But it's come back here. You see this fellow gap right here, it retests the fellow gap. So basically it breaks through the bullish breaker right here, but it retests the fellow gap. Let's see how it play out tomorrow with it fellow gap. We're gonna fill and retest it auto block, and then start to go up, or it completely break down. That's the two scenario right there for to look out for Wednesday. Here's the 4-hour time frame. So for time frame, we see the retest here, and not even touch that, but it, you know, pull back right here. It pull back right here, it retrace right there. But it's still above, you know, the new week opening up, and it's still above the candle at 9 on Monday. That's one of the key level that we want to watch if this week gonna go up or it's gonna be continue to go down right there. Okay, look at the 1 minute. Right, I think we do a practice trade right here. Around this, I believe we enter right here, right? 10:09. So basically we see right here on our M1 is a barrier breaker and a retest, so we try to enter it at 10:01 and stop loss right here 439.34. Target up there at the over 930. Okay, then we see that the buy entry is wait for the retest right there, and the sell side liquidity will rated right. Then anyway at 10:31 we get stop out. So the good lesson we learned that when we are try to go low, go long on a retracement or reversal, we have to wait at least around 10:30 or so, because but by that time we know the end of the day and the low of the day, so it gives us a more information right there. We eventually got stop over here. Like yesterday is rebound around 12. Yeah, so conclude right here. Lesson learned for us is it's not a successful trade for it's not a winning trade for us. Then it provides, you know, a good lesson learned for us right there. It's early entry. You know, we do entry early. Too early in this case. Why we don't see the short? Yeah. But today you see the liquidity is not clean. It's not, you know, low resistance like yesterday. Like yesterday, you know, you see two clean move, right? It's like a V shape right there, down and up, and the move is very clean with very low resistance. But for this today, the move is look like very toppy and high resistance. So we don't know what really, you know, make the condition. You know, what established the condition. But after we stop out right here, right, then we have a change and along again. Right here you can enter a long position and capture the move right there. Is this $1 move? 114. You see right here it's a down move, right, and then yeah, if we see that right here, is it auto block right here? You can see the two candles right there. That's auto block right there, and huge displacement, and then fell up, and this one just retest that, and boom, it start going down. You see, and then another instant that you're gonna test that level is at 12, at 15. Let's see. Yeah, that's how amazing that level is hold right there. You see that's auto block right there. Huge displacement fell up, and this did a retest to that fell up right there. Auto block and it fell up. And you can see that it dropped lots of sell side liquidity right here. Look at that move. Let's say we enter a short right here on the retest, right, and we know that it's gonna surely, or at least it's gonna go and retest this bullish order block right here. So that, let's see how much we gain from this trade. Wow, $1.50, that's a good move right there. And how much we reach? If we enter here, we reach on it order block with about 34 cents, and we get $1.50. So it's a good risk reward trade there. Okay, then let's take note of this practice trade. So a short setup, right? And the reason why it's not going to take our liquidity, buy side liquidity here, because this auto block and displacement, that's the signal tell you that the algo already set resets to shell program, which is going down. Okay, then let's take this screenshot, log it into our database that we found this setup. What we are doing right now is just exercise, have built our mind to recognize the pattern, the setup. I mean, right now we do after the facts, but we gotta improve and make it better in when we recognize the future, I mean in the real time, right? That's our goal, auto block. Further up, retest, and a short setup. Do we have a byte size of liquidity taken? In this case, we do. We have a intermediate term right there. You see the cells are liquidity. Byte size were rated, right? And at the same time, we do have a self-selected word trap, which is right here. It's a big down move, and then this the retracement, and then boom. We'll check out the self-selected right there. What is our time entry? Hold on. Put right here. 10:53. Let's redo again. With us. I mean, some people they call this a bear flag, right? That's an idea right there. But in terms of liquidity, we use this language. So basically, buy sell were rated, and the build up essentially were trapped. So it's gonna boom go down and take the sell liquidity right there. And the time for us is 12:53. I mean, after 12 you don't see reverse. It fell to, in this case, about, yeah, it reversed. I mean, actually it's around 12:15 like that, but it cannot hold. It hit into this level, and this fellow gap right here, and then it just start going down again. Right here. And now our target is the swing low right here, the one that check out the swing low. We can put the target in here. Over here. So setup area or price swing. Price swing low. Here, hit that. I think the target hit about 12.15 right there. I mean 13.15. So the trade will about 25 minutes. You hold to 25 minutes around that time. So we have a short setup trade. It will auto block. We don't show any bearish breaker and fair gap. Let's see. Let's finish this one first, and then we can see any other after we might miss. No, it's not long. Alright. 1 minute time frame. And we have a ratio. Let's see. We reach 35 cents. Okay. And we gain $1.55. That's a good move right there. So it's about 1 to 6 ratio. Let's see. Yeah, in this area you can treat that this is a bearish breaker also. It retested bearish breaker rate. This one and this one. It overlap right there, right? If you do this, you see this overlap rate area. So you can see that all this retest is just retest this bearish breaker. This is auto block, but actually it have overlap confluence right there. So basically this can also see at a this setup also see at a slash bearish breaker level. So it both setup that confluence other. So it's a very high quality setup right there. How do we see that on 1 hour time frame? Let's take the screenshot. Very good. Retest. Give us a high property setup when both setup confluence in each other. Auto block, failure gap, or breaker block, failure gap. So basically we say that barrier breaker in this case, and auto block, retest. It's a very good trade. We didn't recognize this at first. Now we look it back, we see that. And you see that it retests us at a second time. And this time give us the same, pretty much the same risk reward ratio right there. Same run. 550. So basically when we reach the target we have to get out, otherwise we feel a little bit nervous, a little bit discomfort when it come back there. So right here we can see that's the second entry. Note right here, second entry at 15.50, and we know that there are a lot of buy side really such as we were trapped right here, and last move it hit into this auto block, boom, it starts showing up again. Hmm, 15. Basically around 3.50. That's the last candle, 1 hour right here. Alright, let's see. Okay, now go back to the 1 hour time frame. Now go back to the 5 minutes time frame first. I'm gonna go to the DR model. So the VR model yesterday violate because it swing both ends, but today it validate, right? But a little bit tricky right here. If you try to go in right here after 10:30, you try to right here, you short them, and you want the way to get the target, which is 1.5 standard deviation. You don't have it, and they come back here. It may make you nervous if you continue to hold a trade, but if you hold a trade, then boom, it got reach your target. But for some reason, if you are greedy, you want to go continue to hold, then you're gonna be a little bit trouble when you come back at that level. So today, if you trade the DR, you have to be very nimble right there. You have to have a conviction in your trade, otherwise you get wrong. You get in on wrong time and get out on wrong time, then you get in trouble. So that's the DR model right there. Let's look at well, at a 1 hour time frame, what do you see right here? Oh, I think I mistaken. So basically, you see take down London, and we thought it's gonna be go up right here, London low, but it did not. It continued to go down. But however, you see this favorable gap right here is fill that favorable gap. Let's see it's bounce back from here. That's that the I would love to see this go all the way here, retest this bullet order block right here. But anyway, I think that's it for now. Thumbs up. Bye bye. Thank you.